Hi, everyone. This is Sam Silverman, managing partner of EB5AN. Thank you for taking time to join us on today's webinar. Today, we've got the unique opportunity to go through some of the newest EB5 filing data that's available. And we're going to be covering the insights that we've derived from analyzing some of this new data, specifically I-526E filing trends and backlogs. And we're going to be talking about recent trends for both China and India, as well as some of the other rest of world markets. And we're also going to be incorporating into our discussion some non-public data, some proprietary data that's been provided by Customers Bank as well, to get some real kind of up to the moment data on what's happening in the EB5 program in terms of investors, countries, and project preferences as well. So this is going to be really comprehensive, and we're going to cover a number of different data sets and try to provide some of the key insights from that data. All right, so let's get started. So here's a quick overview of what we're going to cover, a little bit about EB5AN and the visa program. We'll talk quickly about some urban and rural projects, which will be helpful context as we go into the differences between rural and urban processing timelines and volume and potential as well, to kind of have a good context for that. And we'll summarize some of the trend insights in our executive summary, rural and urban format petition processing data, what the real, then we'll specific data with respect to projects and for I-526E recent investor fundings, and then we'll kind of circle up with some conclusions and how filing data compares to investor volume looking back. All right, first a little bit about EB5AN. We're a national EB5 regional center operator and investment fund. Our regional centers cover the entire United States. We've worked with thousands of EB5 investors. One thing that sets us apart from many of the other EB5 regional center companies is a relentless focus on investment transparency.
Our company is really focused on that transparency, which includes how to evaluate projects and the red flags to look for. So we have a lot of very good content on our blog, on our website, and in places on ways to diligence EB5 projects, because we know quite often this is the largest investment many of our investors have made in their life. As you see on the screen, both Sam and I, we used to work for the Boston Consulting Group many years ago, and since then have obviously started EB5AN over a decade ago and have been focused on providing best-in-class deals for EB5 investors and have grown into one of the largest EB5 companies, as you can see from our background. And additionally, today, we're joined by Ahmed Khan, who's joined our team, and we'll let him introduce himself now.
Yeah, thanks, Mike and Sam. So yeah, my name is Ahmed Khan. I'm sure if you've tuned into some of our webinars before, you've definitely heard my voice. But my background is as an immigration attorney and also as a regional center executive for the last over 10 years of experience working with both the regional center side and investors specifically. So super excited to share some insights today.
Perfect. Thanks, Ahmed. And next, we have our special guest for today, Dan Toppel. I'll let him introduce himself, but this is where we're getting some really unique insight and data of things that are not published by USCIS in terms of current trends for investors before they're actually doing their filings.
Thank you, Mike, and good afternoon, everybody. Again, Dan Toppel, Customers Bank. I've been in the banking world for close to 25 years now. Specifically in the EB5 side of things, going on close to a decade. And I'm very excited to be part of this webinar and to really dig into the data. So Sam, Mike, Ahmed, thank you very much for including me.
Excellent.
Okay.
Thanks, Dan.
Great, perfect. Okay, we'll skip over the regional center maps and we'll just get right to some of the current projects. Mike, do you want to give us an overview of some of the current projects that we have open at the moment?
Sure. And since the RIA passed back in March of 2022, our company has been very focused on not thinking that EB5 is one size fits all anymore. So if you can click to the next slide, Sam, what we have now, perfect, is we look at it at the highest level where different investors like different things. So the first big distinction is the rural TEA versus the urban high unemployment TEA. And we're going to go into a lot of detail on the recent trends from all of those different items. But the two rural deals that we currently have, one is a follow-on, and we just launched this to our most popular project we've ever had, the Twin Lakes project developed by Coulter, an active adult neighborhood that was right outside of Atlanta. We now have the next version of that, which is a similar neighborhood right outside of Charlotte, North Carolina. And we did just submit that I-956, so that's pending, but very similar in terms of the project itself. And the pre-approved rural deal that we have is our Snake River Sporting Club, which is a deal where it's 956F approved. All the jobs needed for every EB5 investor are already created. And it's already a very successful neighborhood. And it's on the shorter side for rural duration for loans. The two urban TEA deals that we have are both with the Coulter Group. One is an equity project with a higher return for those investors that are more focused on that ROI and a faster return of capital and are okay with the urban high unemployment TEA category. And our most recent I-956F approval is for our One Tampa project, a condominium project in downtown Tampa, which is about halfway pre-sold at this point already with a very short loan duration. That's being built by Coulter, one of the largest developers. So as you can see, it's a bit of a grid depending on what an investor prioritizes. We want to have a deal that fits best for what their priorities are, typically with jobs created, already under construction, fully capitalized, and quite often with the I-956F already approved.
Yep, and the only other thing I'll add to that is that we like working with proven models and sponsors. So as Mike alluded to, Rocky River follows our Twin Lakes project, where we've done 5 different Form 956F submissions, 100% approval rate. Many investors have already received their green card. This is just a complete copy of that same project, same brand, same investment. And the One Tampa project follows 6 prior EB5 Coulter condominium loan offerings, all of which have all been completed successfully. All condos sold, money has been accounted for. So just proven model and just the latest iterations of those two structures in the One Tampa and the Rocky River projects. All right, so let's get into takeaways from our discussion. And I think before we jump in, Mike, do you want to kind of share a little bit about our experience working at BCG and putting slides together and kind of what that translates to in terms of, diving into different data sets and, not being able to have 100% answer on something, but, being able to kind of triangulate across different pieces of data and then, put that into an easy to understand, action-oriented message.
Exactly, and that's what the background of BCG has done for us. Is we love data and looking at it, looking in trends, and trying to get to the second level conclusions. Because there have been some other presentations and analysis of the data, a lot of which has been good, but there are some pieces to the story that I think haven't been told. And what we've worked to do is to consolidate many sources of data, including the ones that we'll see on the next screen from different sources, and look at it where we can triangulate from 4 or 5 different angles and get to what we think the conclusions are, but really laying it out in a way of why we think that's happening. These are our conclusions. Of course, without perfect transparency of all the data today, we can't give you exactly what it means, but we can tell you based on everything else what it leads us in terms of the assumptions. And I'll let Ahmed run through the different data sources that we have here. And again, we really want to say thank you to those groups that have been working hard and advocating and going through this time of having real data versus what happened in the mid-2010s of not having any data at all before a big backlog hit.
Yeah, absolutely. So as Mike kind of mentioned, what we're trying to do in this webinar and generally is take the data that we have and try to make, educated hypotheses about where the industry is going, what trends we're seeing, what to kind of expect. And this is all to help investors make a better decision as they're going through this process, right? So first, we just really want to give a hearty thank you to the folks who have provided a lot of the data that we're going to be using today. Obviously, II-USA has multiple efforts in place that are geared towards collecting some of this data. Meyer Law Group, Brandon Meyer, Paul Chen, some of the folks there that we work with fairly often that filed the FOIA here to get the data that we most recently got. Wolfstorf Rosenthal, Bernard Wolfstorf, Joy Barnett, Vivian Zhu, some of the other folks on the EB5 team that have been doing this for a really long time. And then finally, Customers Bank, Dan, who's joining us today to kind of extrapolate what he's seeing. But Customers is one of the largest EB5 escrow banks. So a lot, not just us, but a lot of other folks in the industry use this data use Customers Bank. And so this data is not representative of the entire industry, but it does give us a snapshot that we can, further extrapolate from. So I think, one point that I'd like to make before we get started is investors today have so much more information and so much more data than they've ever had in years prior, right? If you go back to the middle 2000s and definitely, even the mid 2010s, investors were often just kind of going off the word of regional center representatives and attorneys, but they didn't have a lot of information at their fingertips that they could do their own deep dives with. And thanks to the efforts of folks like these and others, AIIA, there's some other law firms as well that have gone through and gotten some of this data for us to use. It's really, really helpful for investors who are now making decisions today. So thank you guys for providing it.
Great, perfect. Thanks, Ahmed. So let's dive into some of the conclusions. On the left here are the different pieces of data that we use to triangulate. So there have been two recent FOIA requests that have been provided, the one from Wolfstorf and from Meyer Law Group. Different types of information are consolidated here. II-USA did a great job of gathering a lot of data from many of the major EB5 players in terms of approval timelines and trends, and we've incorporated some of that information. Additionally, the two pieces of proprietary information that have not been seen before. First is the Customers Bank wire information of just how new investors wiring, which typically lags filings. So we're able to see, it's ahead of filing. So we're able to see what the future looks like in terms of filings that are going to be submitted. And then internally, we've been able to analyze all the data that we have of our well over 100 I-526E approvals, 956F, and get to these conclusions. So the first main conclusion that we've come to is that although the high unemployment urban TEAs have been much more popular, 1.5 investors for every 1 rural investor have chosen the high unemployment versus rural, it does seem like, based on the recent data, that it is shifting more towards rural, almost closer to a 50-50 balance. Now, it's still 2-to-1 in terms of the set-aside visas, 20% for rural versus 10% for the high unemployment. So to have a real balance, you would need to go 2-to-1 rural versus urban, and we're not seeing any indication that we're even getting close to that. But we are seeing a real shift towards more investors are now looking at rural as a viable option, and we believe that's because approval data is coming out and people are getting approved relatively quickly. The next big item that I'd say that we're seeing from these FOIA requests is that the two big markets are China and Indian-born investors. Over 70% of all post-RIA investors come from those two countries alone. So we are seeing a lot of the major players in the EB5 space focus on investors from those countries because that's the highest bang for the buck, rather than going for countries that have 5 to 10 investors when you can get well over 2/3 of the industry with two major markets. The third key point is that Chinese and Indian investors very likely already face backlogs. Mathematically, we don't see how it's possible that there are not significant backlogs in the high unemployment urban category, and we'll run through some of this data later of how we get to the point of where it's at. And then in terms of rural, there does still seem to be sufficient supply in terms of the visas that need to be issued. There still is a good runway here, but it is getting to the point that a volume keeps increasing. We could even see very short backlogs, but something show up in the rural category in the next couple of years. Next, and this is a takeaway that we have, which is a little bit different than what's been presented by some others, just because we're looking at the data internally and really taking a step back, which is USCIS is absolutely prioritizing rural 526E forms. We have both urban, high unemployment, and rural deals. And although we can look at some charts in terms of the average processing time for high unemployment deals versus rural deals, nearly all of those high unemployment approvals came from the very start of the post-RIA period when there were not rural deals available or very few. So it's a bit skewed because the vast majority of all petitions were in high unemployment, and those were the first in. So we are seeing a good number of those approved. But since after the first, let's say 9 months of that program, we're not seeing any high unemployment approvals, and we're seeing tons of rural approvals. So the key number that I would say is that of all the data, 92% of the high unemployment urban TEA 526Es are not adjudicated yet. So anything that we're looking at for average processing times of a high unemployment TEA, I would say are pretty anecdotal, seeing that over 90% of those petitions that have been filed have not actually been adjudicated. So that is one thing that I think we probably differ on than some other groups in trying to interpret the data, is that we just think that's too small of a sample size, 8% being approved, and most of those coming from the very first start of the program when there weren't rural options, we think skews that data a little bit. And the last key takeaway, and this is something also unique to us based on viewing the customer's data, which we'll get into later, is that we believe the overall demand for EB5 has stayed relatively consistent. There was the fee increase that happened earlier this year in April, which did pull a lot of filings to the point where, based on USCIS data, there was about a 90% drop off from the quarter before the fee increase to the one after. And the data from Customers Bank and our internal data shows that's not actually reality. Yes, filings may have crashed by 90%, but demand was much smoother than it appears in terms of new investors signing up and sending in their wires. So we'll run through some of that data too, but I think that's a very important thing, is number 4 and 5 on this list are unique insights that we've come to that have not really been presented by others, but we think are very important when investors are analyzing making their EB5 investment. And I know that was a lot of information that we went through very quickly, but I wanted to highlight a lot of these key conclusions so that as we go through the rest of the presentation, you'll see the backup for this and where we're getting at. But I think that this is, at least to me, the high level information that we've been able to gather.
Ahmed, do you want to jump in and highlight a few things that you think are important as well?
Yeah, absolutely. So I think that Mike really, that was a pretty comprehensive summary there. And I know there's a lot going on in this slide, and obviously we'll make this available for everyone after the webinar. But I think the big thing that, I want to point out here is the point number 4, right? And I think there's a common misconception that regional centers are all competing to say that rural is better or high unemployment is better. I don't think we're trying to do anything like that. We have both projects and we prioritize both projects, honestly. What we're trying to convey here is just real-time data and conclusions that are based on things that we are seeing so that investors can make their own choice, right? It's not to say that a high unemployment application will not be approved or won't be approved at all or anything like that. It's just saying that clearly from what we've seen, and there's a lot of data now to support this, rural investor Form I-526Es are getting picked up faster, they're getting adjudicated faster, and ultimately that means you're now getting to the second part, which is getting your actual green card in hand faster. So yeah, I think, other than that, Mike really did cover pretty much everything. I think we'll really jump into points 1 and 3 as we kind of go on. And yeah, I think 5 is also very interesting, and I think Dan will be able to provide some insights to that as well in terms of what we're seeing as trends in terms of filings overall.
Perfect. Thanks, Ahmed. So to jump in, this is our internal proprietary data. So we've analyzed the projects that we have I-526E approvals for and tried to highlight it here. And it's the same kind of story that I was telling, that on the surface, it looks like maybe there's a 10-month difference in between an urban high unemployment TEA and rural in terms of approvals. But when you actually pull back the layer, a vast majority of our high unemployment petitions are still pending and likely will be pending much past that 20-month mark in terms of the point of actually getting those approvals, versus we have a ton of data now, well over 100 I-526E approvals across various deals in the rural category, where we can very concisely and conclusively show what the processing timeline looks like in terms of getting closer to that 10-month on average processing timeline, especially for the recent ones. The initial ones took longer, I think, as USCIS was figuring out how to prioritize and do it. But recently, we are seeing that processing time drop on average for rural TEA 526Es.
And it's and also to add on that, it is happening in both directions, right? So urban projects we think are going to take longer, and rural projects we think are going to take even less than they are today, right? So it's splitting in both directions. If you look on the left-hand side here, Wahali was our first rural project, then Twin Lakes Equity, then Loan 1 and 2. You can see that the average processing is shorter by 3 months. So as time has gone on over the last 2 years, like it's coming 11 down to 8. So we think that trend is going to continue. And then we think that 20.5, we think that's going to become even longer. And so as that happens over the next 12, 24 months for investors filing today, on the right-hand side, we think the teal bar on the bottom, rural TA, is going to get shorter, maybe 7 to 8 months. And we think urban is going to get even longer. And so that difference, as Mike mentioned, which is now about 10 months, we think that's a lot larger, basically, for new people filing today.
And if we go to the next slide, we're going to visually show every approval that we have from the rural deal in our Twin Lakes project, which has been our most popular project. And you can see that the first equity, the first offering that we did, much bigger array in terms of processing timelines, much longer at the start of the program. But recently, it has consolidated, where we are very consistently seeing plus or minus 10 months for investors getting approved from Twin Lakes Loan 1, and Twin Lakes Loan 2 was just started, and those are in under 10 months. So we think that, again, we really like data. So when you plot this out, we have over 100 data points here. There is a very clear trend line that we can go to here. Now, we're not saying that it's going to zero in terms of processing time just because it's sloping down, but the clusters are getting pretty significant in terms of processing time.
Yeah, and something else I'll mention here, there's a lot of variables still, and we definitely think based on the trends that we're seeing that these are the right conclusions. But one of the things that has been talk in the industry is adjudicators, and as adjudicators have really caught up with pre-RIA filings. Obviously, there's still a lot of backlog filings, but those won't be looked at until they become more current. But those adjudicators can now move over to post-RIA filings and start looking at those. So there's a possibility that everything gets a little bit shorter, but I do agree that the priority that USCIS has been giving to rural, that gap between the two adjudications will continue. And so what does this mean for an investor filing in rural versus high unemployment? Again, it doesn't mean you're not going to be approved. It certainly doesn't mean, that you've got something to worry about, but it certainly does mean that this process is a little bit more elongated, sometimes even double the time to get to the stage of having your green card in hand, your conditional green card in hand. And so you still have the EAD if you're filing from within the US, you still have your advanced parole as long as it stays current, at least. But it's certainly, we just want to set expectations, and investors who are really prioritizing having their green card, right? We talk to investors who have kids who are applying to med school and they need a green card in hand to be able to apply. For them, the priority is not necessarily to look at all the other factors. They're just focused on getting that green card as quickly as possible. Well, guess what? For them, I would definitely recommend a rural project, so you can, basically make that process as fast as possible. So it's really important to understand your priorities and then use this data to help determine what the best course of action is for you.
Yeah. And as we move into these next few slides, IA USA, thank you again for putting together and reaching out to the industry and gathering data. So here we pulled in the data that they have, and they had a very good webinar last week, I believe, on this, but we come to different conclusions when we actually dive into the data a little bit further, where this is the data that they were given, and this looks generally right to me. So rural, there's 214 cases approved versus 126 of those high unemployment urban in an average of 14 months. But if you look at those bottom two charts and you really double click, it's the same thing we were saying before, where I imagine of those 126 approvals, nearly all of them came from within the first 9 months post RIA of investors filing. So we don't really have anything more recent than that of seeing how quickly it is, other than maybe an exception or two of an expedited mandamus, something like that, versus the rural are definitely happening more quickly. And this line also illustrates that, although I think that the data clusters that we showed earlier do a better job, where again, it's very helpful to have this data from the entire industry and be able to see those things. But when we get there, we tend to believe that those high unemployment urban TEA petitions will be processing a lot longer, just based on our experience of not seeing that many out of those first 9 months get approved for us.
Yeah, and another quick addition I'll make to this, a lot of the industry is on these forums and WhatsApp groups and these conversations that I'm having with investors on a day-to-day basis. And, there are definitely urban applications getting approved in like 10 months. We've seen that. But there's also people filing mandamuses. So a writ of mandamus is one way to kind of push the envelope for USCIS to approve cases faster for those investors who are willing to pay a little bit extra to get that. Certainly, that's something that they should be considering. And so, don't just take a number for what it is. Always understand what went into that process to get that approval. I'm not saying that there's anything wrong with filing a writ of mandamus. I think it's a great idea for those people who are willing to expend that extra money. But certainly keep that in mind when you're seeing an isolated case of someone getting approved in 10 months. Doesn't mean that's going to be the norm. And again, what we're trying to look at here is using a wider set of data to come up with a further extrapolated hypothesis of trends, and not necessarily what could be possible.
Perfect. Thank you, Ahmed. All right, so now let's get into some of the specific numbers and get a sense for where filings are happening and how that differs across geographic region. Mike, do you want to kind of walk us through some of this data?
Sure, absolutely. And some of this is data that's been available, and there have been some other pieces of analysis on this, but I think it is really important for us to also dive into the by country, by category. So as we mentioned before, a vast majority of all applications have been from China and India, as you can see from this stack bar chart, where China and India make up the bulk. And it was a bit surprising as we dig into this more that for India, it is much higher in terms of the urban high unemployment applications versus the rural. But that is true because a lot of the time, Indians are applying from within the US in adjusting status and have shown a trend towards preferring high unemployment deals in major cities versus rural deals. China is now starting to catch up to where there are more rural applications coming out of China. It's still less in total than the urban, but this is where we're getting more towards that 50-50 split that we expect to see. Now, there are still twice as many set-aside visas for rural as for urban, so we would expect that to continue, but you can see that based on these numbers, it's very clear that investors have strongly preferred the high unemployment. China and India make up the bulk of the market, and high unemployment for Chinese and Indian investors still does tend to be the favorite.
Yep, exactly. And note that this data is through July 5th. So by August, September, there have been another 3 months of information that we don't have access to, right? So as we get into some of the other slides, you'll kind of see some of these trends, and you can kind of get a sense for what those most recent few months could be in terms of the breakdown between rural and urban, and then also by country. And so here, if we look at the same data, but now we're looking at it by year, we can see how volume was pretty low in the first year in fiscal year 2022, but how it's really picked up over the last 2 years. And China and India have really grown with respect to the percentage of the total applications over the last year from 23 to 24.
Yep, and that is one of the key takeaways to me is about 80% of overall applications in fiscal year 24 are from China and India. So, I mean, that's what's dominating the entire EB5 market and is driving it.
Yep, exactly. And this is only a partial period for FY24, right? So the total is actually substantially higher than that, right? So the market is growing, and it's growing in all segments, but particularly for China and India.
Yeah, and I'll kind of extrapolate from that further, Mike. Like, I know you're 100% right. Obviously, India and China continue to dominate the market, but what always kind of continues to surprise me is just how much the rest of the world is continuing to grow. It's a great thing, right? In one sense, because more places around the world are finding about the EB5 program. They're looking into it and choosing it as an option to move to the US. But in another way, it does start, taking away visas from other countries, more specifically India and China, that are looking for a lot of those visas, right? And so I think that brings us a little bit to the next thing that we want to talk about, which is the percentage. We see the percentages here, but what does this really mean? What does all this demand mean for visas, especially within the specific categories of urban and rural? And here you can kind of see on the slide the breakdown of just how many applications are in each category and currently pending. So I think the biggest takeaway here for me is, even though rural has caught up in a big way, and we're starting to see a lot more applications into the rural set aside, urban has continued to just outpace it completely. And you see here, there's more than 1,000 more applications pending in the urban high unemployment area set aside versus the rural high unemployment area set aside.
Right, exactly. There's more than 1,000 more applications pending, and there's half as many visas available for those investors in the urban category, right? So it's just simple, much more demand, much fewer visas equals longer waiting period.
Yeah, and in later slides, we'll go ahead, Mike.
Go ahead, Mike. Yeah,
I was just going to say in later slides, we'll really dig into that.
Yep, exactly.
Yep.
So
yeah, all right, let me just frame the conversation that we're about to have and talk a little bit about visa distribution, or allocation, I guess is a better word, and how the Department of State does it. So I hear a lot of investors who are confused about this, and they just want to learn more about, okay, I'm Indian, or I'm Chinese, or maybe I'm from somewhere else, and I'm looking at understanding what is the backlog, how does it develop, and when will I get my visa? So let's take a step back and just understand the EB5 category overall, right? There's 10,000 visas every year, and there's also rollover from the year prior that are unused to some extent. And this is a big, we can talk about what is rolled over, what's not. I think that's a conversation for a different day. Let's just understand the basics for now. So let's use 10,000 as the base number. Now, of that, there's specific visas that are set aside or reserved if you're filing in the urban, rural, and infrastructure, which will also kind of leave out because, let's face it, there's almost none of those applications currently. That doesn't mean that the Department of State is filling those categories first and then spilling over into the larger unreserved category. It's actually going the complete opposite way, right? So and we saw this last year, the unreserved category got full first. We saw that in September. The Department of State announced that unreserved visas were completely filled and they were not issuing them any longer. It was only a 1-month thing because they'd obviously used all the visas, and that's a good thing. But that's what they're filling first. All the visas that can be allocated in the unreserved category, they're going to allocate those first. And that's 7% per country. That's what you're applying it to, is those 7,000 or so visas in the unreserved category. So the country protections. Okay. Then the Department of State starts looking at, okay, we've filled up all those numbers. Well, some of these people who are pending might still be eligible for a visa because they're protected by the set-asides, right? The reserved visas. So that's kind of the way it works. And I think a lot of people often think, well, I'm filing in a rural project, I'm only looking at the rural thing. No, there's numbers aside from that as well that you need to consider. And the reason why this is important, especially for India, like I think China, there's a long backlog in the unreserved category, and that's where the problem really lies in terms of understanding how long that backlog is, because it's going to take several years for us to clear that backlog. But for India, if you look at the priority date on the visa bulletin, we're already into 2022, which is right when the RA started, which means USCIS is pretty caught up in terms of adjudication for cases filed pre-RA for Indians. And so over the next 2 to 3 years, it's a pretty reasonable expectation that they would clear out the Indian backlog in the unreserved category, which opens up hundreds of more visas available to Indians at large in the EB5 category, including urban and rural. The problem is we're talking about a few hundred. Once those are used up, guess where there's going to be a lot more room for those Indian investors. There's going to be a lot more room in the rural category because there's more visas there allocated every year. And so I think that's important to understand how the math works and how the Department of State views visa allocation. And then you can start thinking about, okay, let's start crunching numbers. How many people are ahead of me? How many visas are going to be allocated? All that other stuff.
Perfect. Thanks, Ivan. I agree. It's important to get into the mechanics. And later on when we're talking about it, you'll see, and you don't have to become an expert at the mechanics of issuing it. You can, a lot of the time, just step back and look at total numbers and get a good sense of where we are with backlogs. And some of those other complexities come in if the rest of the world picks up demand and things like that, which could extend the backlog versus kind of setting the bottom end of what we think the backlog could be.
Yep, exactly.
So we'll very quickly run through the by country for rest of world China. So this is China showing how it breaks down with urban versus rural and fiscal year 24 to date. So we've now seen for China, rural is becoming slightly more popular than those high unemployment urban TEA investors. Now, overall, more have still chosen the urban deals from China, but rural is now increasing in terms of velocity from China. And India is getting closer to half and half, but surprisingly still hasn't exceeded it, even though we'll look at the analysis where we do believe there's a very significant backlog. And we think what's pushing that trend is a lot of investors still choose high unemployment urban TEA deals. A lot of our Indian investors are choosing our high unemployment urban deal because they can't adjust status, get their work authorization, advance parole, and they just prefer those projects, or they want a higher return or various other factors that might be available in the urban deals. And as long as they know that there is a very significant chance of a multi-year wait to get the green card. And lastly, and this is important, the rest of the world just overwhelmingly is choosing the urban high unemployment deals. We know there are some international investors that want that green card as quickly as possible, and they're choosing the rural, but nearly everybody else that isn't in a rush seems to be going towards the typical high unemployment urban TEA deal.
Yeah, absolutely. And, we can talk about the different drivers of why, there are so many people filing in high unemployment area. I hear the myth often that high unemployment area projects are inherently safer. That's certainly not the case, right? What makes a project safe or unsafe is just the way the project is structured, how much collateral there is in the deal, where you sit in the capital stack, what all the different funding sources are. There's a lot of different factors that go into it. Location, is definitely always, the market is definitely important, but certainly just being rural has no bearing on that. And I think Twin Lakes is a great example of that, right? Twin Lakes is a project that qualified in the rural set aside, is just an hour outside of downtown Atlanta. The next project that we just that we talked about at the very beginning of this presentation called Rocky River, just less than an hour outside of Charlotte, North Carolina. These are big, metropolitan areas, and the project sits just outside of them. And as these big metropolitan areas continue to grow and spread out a little bit, these are the projects that become very, very attractive. And, they're just as safe as any high unemployment area project. It has much more to do with than just their location. So yeah, there's a lot of different factors. I think inventory is part of it, right? It's hard to find good rural deals. And so there hasn't been a ton of inventory on available to investors, although there has been plenty so far to meet demand. So yeah, I think there's a lot of different things to talk about in terms of why there's so many high unemployment area filings, but definitely investors need to just understand, like, hey, what are my priorities, right? Is my priority number one to choose a project that is in a major city just so I feel comfortable? That's totally okay. That's your preference. That's a decision that you can make as an investor. Then look at high unemployment area category, knowing that you might be waiting for a longer time to get your green card in hand. And that's okay for a lot of people especially if they're in the US and can adjust immediately. If you're an investor who's thinking, okay, no, I just got to get my green card as quickly as possible. There's something going on in my family that dictates me having a green card in hand. Yeah, you really got to start looking at these numbers and making an educated decision about what's going to get you that green card in hand fastest.
Perfect. Thanks, Ahmed. And now I think we're going to shift over to some of this customer bank data. Let's give Dan a chance to talk for a little bit. This is probably some of the most exciting data that we have because it's new. So Dan, if you want to just kind of give some background on yourself, and then we can run through what we're seeing in your data.
Definitely. Thank you, Mike. So, here at Customers Bank, we've been involved in the EB5 industry for about 10 years now. And what's great is that we have a full team here, full service, where we pride ourselves on our level of service and on our level of knowledge of the industry. It wasn't until the RIA that it really took off for us. 2022 was really when the team here at Customers was, I'll say, full steam ahead with regard to EB5. And then, because of changes in the banking industry in 23, that was really just, okay, now we're not going to sleep anymore. We're all EB5. And we love it. We're passionate about the program. We believe in it. And as I said, we understand it. So, we're not just doing this, looking at it as another banking vehicle. We're looking at it as we're helping to create U.S. jobs, helping foreign investors to achieve their dream of U.S. residency and ultimately green card status. And the bank itself, not just in the EB5 space, but overall, we pride ourselves in the industries that we're in. Most recently, we were ranked as the #1 bank by American Banker magazine for banks that are between 10 billion and 50 billion in assets. So that's a point of pride for us, right? The services we provide, it's really the end-to-end escrow services where we are not only the escrow agent and escrow bank, but we're also the banking partner for the subsequent entities. So those would be the NCE, the manager entities. And we've acted as escrow agent and banking partner to dozens of projects. Total raises have been in the billions of dollars, and we're going to get into some of the numbers with regard to the trends we're seeing with the investors that come through the projects for which we are partners. One quick thing I'm sorry, go ahead.
Real quick, I just wanted to bring it to the attention because I talk to a lot of investors and they often have this question. They're always asking, is my money insured? Is it safe? And I think you're about to touch on it, so I'll stop. I thought I'd jump in, but I think you're going to touch on it anyway.
What sets us apart from a lot of the other EB5 companies that you work with in terms of the escrow protections and the ICS?
Sure. So all of the escrows and subsequent accounts that we have with EB5AN are protected by something called ICS. That's Insured Cash Sweep. So what that is, that's a vehicle that we offer that provides for full FDIC coverage for the balances that are held in the respective accounts. So what that ultimately means is that standard FDIC coverage is $250,000. Anything above that, investor proceeds, client proceeds are at risk. So we provide a solution where we insure up to over $100 million. And this is part of a program that allows partner banks to get involved as well, where again, at the end of the day, we could insure over $100 million, where the investors, as they're putting money into the EB5AN escrow accounts, because they're are insured by ICS through this ICS program, they don't have to worry about any risk associated with the bank. Now, all that to say, I'm very proud of Customers Bank. We are a very safe bank. We went through 2023 relatively unscathed when other banks had significant issues. But this FDIC coverage, the additional coverage, is just another level of protection to give that sense of security to the investor.
And
Perfect.
Dan,
thanks, Dan.
One thing to distinguish, I think, is that a lot of the EB5 companies will have that ICS function and full insurance on the escrow account. I think what sets us apart a little bit from some of the other EB5 operators is that we also have that same level of insurance, but also partnership level. So before funds are advanced over to the individual project, they're still in a fully insured account to make sure that no matter what happens with respect to the bank, the funds are protected, with the full faith and credit of the Federal Reserve.
Yes,
So
that's right.
said differently, as long as the US federal government remains solvent, the money is protected right before it goes to the individual job creating entity.
Yes, that's correct. And thank you for putting it that way. Yes.
Sure. Yeah. No, that's an important distinction, because money's only temporarily in the escrow account, usually for a month or two maybe, and depending on how quickly a project's utilizing funds, it can often be in the partnership account, for at least that amount of time. And so, it's important to make sure that it's fully insured there too before the money gets transferred into the project.
Right.
All right. So with that, Dan, kind of give us the whole picture. How does the bank get involved in terms of new project onboarding and then getting receipt of funds, and then how does that kind of tie in with investor filings, and how does that all kind of fit together from the bank's perspective? And then what data that you do have available kind of helps give us some insight into what's going to happen in the future.
Definitely. So, and I'll try to be as succinct as possible. So the way we get involved is we're approached by someone like you, Sam, where you have a project that's coming up and you'd like to partner with us to be the escrow bank, the escrow agent, and the banking partner. So what we initially do is we review the offering documents to make sure we fully understand the project. We review the associated parties just to be sure there are no concerns with third party that might have something in their background that wouldn't otherwise be known. So we do our due diligence. We work with our compliance team to ensure that there are no concerns on our end with the project itself or any parties involved. We then work with our outside counsel to draft the necessary escrow agreements, ensuring that not only is the bank protected, but also the investors protected, right? Because at the end of the day, we're the banking partner to the project, but it's our fiduciary responsibility to protect the investor and to protect ourselves. So once we proceed with drafting the agreement, get that in place, it's signed, we then have the necessary accounts open and ready to be funded. So once investors start sending in their escrow proceeds, there's some information that we would require for the respective investors, including a copy of their passport, a completed W-8. There's a worksheet we have them complete so we understand the source of funds, and some additional data just to ensure that they are fully subscribed and there's no concern that, we're doing due diligence on someone that's not even going to be an investor in a project, right? So we do due diligence internally. We make sure there are no concerns from an OFAC perspective. We have other forms of ways of ensuring there are no negative news or concerns legally about the respective investors. And once they clear through our compliance channels and they're fully invested, so they've committed their either partial subscription proceeds based on an agreement with you or full subscription proceeds, we then provide a confirmation letter stating specifically that we've done our due diligence on this investor, we've received what we needed to receive, and we're okay to proceed with this investor. So funds come in from the investor, and we track every dollar that comes in for each investor. Now, I don't want to say that we're doing everything that a fund administrator is doing. We're not. We don't want to be viewed as a replacement for a fund administrator, but we do have certain information that we do have to keep on file and track for ourselves. And some of those things that we keep track of are how much came in, how many wires for each investor, what countries are they coming from, and these are things that not only do we keep track of because we need to, but to me, as a data nerd, for lack of a better term, I enjoy reviewing this. I think it's very interesting. I enjoy seeing the trends. And that, frankly, is why I'm very appreciative for being part of this webinar, because this is really right up my alley. My team here at the bank jokes about how much of a nerd I am when it comes to these numbers, but it's truly interesting, and it certainly leads to an understanding of the way the industry has gone in the past, what happened post RIA, and what we expect to see in the future. So what's interesting is that we have this information on the incoming wires before the I-526E receipts are received, because obviously we need to receive these funds before USCIS receives their petition, right? So that's why the note here about the lag between our data and the I-526E petition data, that's what is the cause of that lag. We have the money up front, whereas the I-526E information from USCIS isn't coming out until 60, 90, 120 days later.
Got it. And so with that information, you can pretty much tell, okay, is volume up this quarter? Is it down? Are investors, is there a spike in investors from China or from Germany? And what types of projects are those investors going in? Is it trending more toward rural, urban? You kind of have a first preview of what that looks like, because people have to wire money, before they print and ship, and then the government, receives and provides a receipt notice for their application, and then, eventually that data becomes public.
Yes, exactly.
Okay, perfect.
Perfect. And I think that on this slide, kind of that gray box, this is what excites me most about the data, is that we're always looking backwards in terms of 526 filings, and there's weird demand spikes that happen with fee increases and things like that are artificial spikes and artificial lulls in terms of demand. And this gives us clear insight into actually how many investors are signing up and wiring. Maybe it takes them 6 months to get their Form I-526E submitted. That's completely normal for investors from certain countries. So that's the data to me that's the most exciting, that we can gather a lot from USCIS and the FOIAs, but we can't gather this. So this is the really unique piece here.
Perfect. All right, so let's get into some of the data, and Dan will let you kind of lead us through each of these slides and kind of share any commentary that you think is important.
Definitely. Now, the point of this slide here is just to make it clear that although we are primarily a Northeast-focused bank, now I'm here in New York, we are partners to projects nationwide. And what's interesting is that we really run the gamut with types of projects as well. So it's not just, again, Northeast, urban, it's not that. We are nationwide with a good, pretty even split between rural and urban. We actually have slightly more urban projects for which we are a partner than rural. But what's interesting is that I'd say probably 2 out of every 3 investors that we've seen have gone into rural projects. And these are post-RIA numbers, of course, right? What's also interesting here is that if you look at the states where we are partners to more than one project, it's also an interesting mix, right? So you have New York, but then you have Wyoming, right? And Wyoming will obviously lead rural. Florida, there's a good mix of rural and urban. California, also a good mix. The New York projects are urban projects. So again, although we're based here in the New York area, that doesn't necessarily mean we're only looking at projects in our footprint. We're able to partner with projects nationwide.
Got it. Okay, that makes sense.
So this is just a good sampling of the total investor fundings that we've seen. And what's interesting here is that, as stated on the slide, the investors that we see account for just over 20% of the overall USCIS Form I-526E receipts post-RIA. So although it's not the majority, it's a good sample size. So it shows that we are one of the larger banks in this space. Our numbers would give a good sample size of what's happening in the industry. And the trends that we're seeing post-RIA are continuing. So although this information, as Sam said earlier, only goes through July 5th, what we're seeing in Q4 fiscal year of 2024 is pretty consistent with the movement that we've seen over the last 5 to 6 quarters. We could go to the next slide. So what we have here is a breakout of what we're seeing in comparison to what USCIS is seeing, right? And what's interesting here is that, again, post-RIA is really where it took off for us. And then March of 2023 is where it just, it kind of exploded on our end. So you'll see that although quarter over quarter, the trends are pretty consistent from a growth perspective, March of 2024 is when we saw the fee increase, right? So all the investors were trying to get in before the end of March 2024. And according to USCIS, there was a huge negative spike post March 2024, but we didn't see that. There was a bit of a dip, but it wasn't anything as extreme as what USCIS is saying. So, obviously, it's a little bit of a difference because they're going based on I-526E receipts versus what we're seeing as far as investors funding. But from our end, we're not seeing it as extreme as what USCIS is saying.
Yep, and just to add to that, to me, focusing on these right three columns for each one tells the story. Where if you look at it, I think a lot of the investors from Q1, October to December that wired didn't actually file in that quarter. And then they all filed in that January to March, and even some from July and September before. So if you look, it's pretty clean demand without that one pop in terms of the customer's bank data. And then within USCIS, you see a big dip down of investors maybe that weren't in a rush, then the massive spike with the fee increase where it drops again. So I actually think that when looking at the overall trends, and we've got more on the next slide, looking at the overall, the new investor, the first wire for a new investor, to me tells a much clearer story about demand than the actual file going to USCIS because of those artificial demand drivers.
All right.
Yep, exactly. So long story, we think the investors is much more stable on a relative quarterly basis, and forward, yeah, is relatively stable, which is good news overall. That the volume is stable, and so there's an incentive for regional centers to continue to go out and identify high quality projects because there's relatively consistent demand that's likely going to continue in the future. Ahmed.
Yeah, I think I was just agreeing with everything that you guys have said so far. It's clear that demand continues to grow. Obviously, we all saw that spike, in Q2, basically the first 3 months of 2024, driven by the fee increase, but that had more to do with filings that went in. And I'm sure, there's regional center filings that also would probably reflect this as everyone try to save themselves thousands of dollars. Makes sense. But that isn't a clear indicator of demand, which really does seem to be pretty steady no matter how you look at it.
Yep. And I think this slide does a good job of lumping in that July to September data as well, which we just got, courtesy of Dan. Thank you. Where you can see that pretty much the last 4 quarters were relatively stable other than that one spike in Jan to March, but not nearly as much as what USCIS shows. But you can see these last 4 quarters in terms of the new wires in significantly more than the 4 quarters before and relatively consistent throughout that year other than the spike. So to me, this is the story that we're focused on, which is, yeah, it looked like 90% down in the filing data, but that's not reality.
Right. And if I could just make a quick point here, what I find interesting is that going back to my early days of EB5, right, 2015, 2016, it was 85% of the investors were coming from China, and that did change over time. And it's such, I'll say, much more of an even split now, right? Where if you look at the most recent quarter, 37% coming from China, 28% from India, 34% the rest of the world. And I think that's where we're going. So Ahmed, back to what you said earlier. It just really seems like there's a shift where the world is seeing EB5 for what it is. It's not just specifically marketed to China and India, but it's really a global opportunity for investors to make their way into the US, right? And another thing that I found interesting is, pre-RIA, the countries with retrogression, China, India, Vietnam, we're not really seeing much with Vietnam anymore. Just running some quick numbers here, it looks like only about 3% of all investors that we've seen post-RIA have come from Vietnam. And it seems almost like Vietnam has been replaced by South Korea and, believe it or not, Canada. We're seeing more investors from Canada than we've ever seen. So I personally, I just find that interesting.
Yeah, I agree. And I think, one of the big stories here, and people have definitely touched on it, this isn't kind of crazy new data, but the rest of the world continues to kind of become more interested in EB5, and more people are using it as an option to move to the US. You're seeing a lot of parents choosing to do EB5 for their children and just bypassing the whole F1 system, not having to deal with an H-1B lottery after graduation. You're seeing a lot of people just, wanting to not have the restrictions that the H-1B brings. And so people who have means all over the world are really starting to engage with the EB5 visa program. And we're seeing increased demand. We're taking calls from all over the world, and it's reflected here in the data as well. So yeah, I think, the big takeaway for me, and Dan, thank you so much for providing this data. This is really, really helpful for a couple of reasons. One, it just shows that, this is a great time to invest in EB5, right? It's only going to continue to get harder and harder, especially if you're Indian or Chinese, to get an EB5 visa as the numbers continue to grow and backlogs inherently form. This is a good kind of inflection point, right? Clearly, this data is showing that the demand is still there. And I think that's what's really key for us. And that's the second thing is demand continues to grow, right? I think Mike touched on it at the beginning of the webinar. And, I just like to continue to hammer that home. Like, it's been pretty constant. And I'm sure other people in the industry would agree that we've all been very, very busy. And so, there's no time like the present when it comes to EB5. And that's always been the case, but certainly with the protection that the RA provides for a few more years, we're on a limited clock in terms of what the rules are definitely going to be. It may very well get extended. It may change. The investment amount might go up in a couple of years. So lots of things to consider if you're an EB5 investor considering this option today.
Perfect. Thanks, Ahmed. And now we're going to shift gears a little bit and get into the last one. I know, appreciate everybody that's still on. I know we ran over an hour. We probably have another 10, 15 minutes, but we wanted to cover all of this, and there will be a recording too. And this slide was the analysis courtesy of II-USA that they recently published. And it's a lot of charts and a lot of bars and things like that. And we'll leave it up for a second. But I think that to me, the key takeaways that you can come to are that in terms of supply and demand, and we have a simplified analysis on the next slide. For the rural category, based on everything that we've seen, it's very likely there's still enough supply of visas for everybody that's applied. In the absolute worst cases of assuming really big families, so more visas per person with near 100% approval rate, it could be that we have a potential for an under 1 year backlog within rural. Urban tells the opposite story. No matter what your assumptions say, even if it was only one visa for every person and you assume 25% of cases are denied, there's way too many people that have applied in that category. So we know for sure there is a backlog once somebody gets approved. May not show up in the visa bulletin for a while because it's going to take a long time to get enough approvals to make it show up. But just basic math shows you there's a huge mismatch in between the demand that's been there for the urban high unemployment TEAs and the visas available. Now, for the rest of the world, you probably don't care about that because you still have the 7% unreserved visas that you get to eat from first. You don't have to worry about only that 10% set aside. But if you're from China or India, this is a really important thing to focus on.
Yep,
exactly. So we go ahead, Ahmed.
Yeah, I was just gonna say, going back to the way I explained it from a top-down approach. Yeah, Mike, your conclusion here is 100% correct. No matter how you spin it, no matter how you look at it, I think the most easy way to look at this, or the best way to look at this, is when you file into a set aside, that's your safety blanket, right? That's where you're looking at, okay, I'm going to get a visa based on the subcategory that I'm filing into, even if they run out in the unreserved category. Rural is giving you a big safety blanket, and that blanket is getting smaller and smaller and smaller for urban high unemployment as more and more people continue to file, and less visas are going to be available every year moving forward. So yeah, I just think, no matter how you spin it at this point, you just got to be ready for a little bit of that backlog that's coming.
Mm-hmm. So this last slide on the backlog, this is an update of what we put out in April of this year after the first, or March of this year. I forget exactly when the first bit of FOIA information did come out up and through November of last year. So we've updated it with our analysis. And again, there's lots of different assumptions that you can make. We're estimating kind of a worst case scenario, 100 for new investors, 100% approval, and we are seeing north of 90% approval based on the recent FOIA data. And also 2.5 visas per application. We think anywhere in between 2 and 2.5 is probably realistic for where we end up. So essentially what you do is very simple math, gets you to the point that for the high unemployment urban, there's likely well over 8,000. We have 8588 in terms of the number of visas that will be required for people that have already applied. And then the rural category, we estimate at the worst case, about 5,700 visas would be needed for those that have already applied. And very simply, you get 2 years because there's a rollover year of each one of these. And there's a little bit of extra from the year before. It was well over the standard 2,000 and 1,000. But as we just look at visas available in the future, for urban, it's 1,000 a year, 2,000 if you include an entire overflow from the last year. So even if we get to use every single one of those set-asides, like there's a 6,500 shortage just in the set-aside. Now, there's a lot of things that go into that in terms of rest of world, other people eating from the unreserved category, and then rural at worst. The absolute worst case, if everybody that was in rural was taking those rural set-aside visas and nobody was in the unreserved, there would still be a minor shortage of under a year, but we also know that's not reality because a lot of people are going to be eating from the unreserved category that did apply in rural from the rest of the world and for other things. So at the highest level, just the summary that we get to, the conclusion, and we said this at the start, is that if you are going into an urban high unemployment TEA deal now, from India or China, you have to be prepared for a 3, 5, 7 year potential backlog because there's too many other factors. And if you get comfortable with that, awesome. There's lots of great things that you can do with those projects too. Rest of world, doesn't matter. You're going to be taking the unreserved visas. And in the rural TEA, you can be highly confident that in the worst possible scenario, it's less than a year of backlog now. And that's with us using pretty aggressive numbers to try and get to, can you make an argument for there being a backlog in the rural TEA category? And it's very hard to come to that conclusion. At the top end, you're not even really there. So that to me is probably the best thing. And now that we actually have approval rates at that over 90%, it's hard to come to any other conclusion than this, if you're being intellectually honest with what the data shows.
Yeah,
yep, exactly. Yeah,
this
is pretty clear at this point. Like some of the other regional centers and attorneys and other parties in the space were kind of touting different conclusions a few months ago when we only had a few months of this data, but now that we have a lot more of the data and it's just so clear that there's a large backlog already, like it's kind of hard to, it's hard to get to anything else, which is fine. Like, you know, as Mike mentioned earlier, the goal here is not to say, oh, you should only do rural, not urban. That's not the goal. It's to just make it clear. Here's what the data is. Here's what we think the logical conclusion is. Here are the assumptions that we're using. And, you know, here's the conclusion that we get to. And depending on what country you were born in, what your preferences are, you know, we have really high quality, exciting urban projects available as well as rural projects. And so, you know, we're indifferent, right? We don't really care if an investor picks one of our urban projects or one of our rural projects. We just want to make sure that they're picking the project with all of the information up front, with a realistic understanding of how long it's going to take them to get through the immigration process and to get a return of their capital, right? That's the underlying factor that we want to make sure is crystal clear. And Ahmed, sorry, I cut you off.
No, I think, yeah, I was basically gonna repeat what you just said. Basically, I think, you know, let's just put aside the fluff. We've had 2 years of RIA filings and approvals and data to now extrapolate from. The reality is the reality. And again, the point here is to make an informed decision based on what you're seeing. And, you know, we hear it all the time, you know, no one told me it was going to take this long. Well, we're telling you, all right? We're not sitting here and trying to tell you, oh my God, you're going to get a green card in 3 months. It's not going to happen. There are great ways to get a green card very quickly through the EB5 visa program, especially if you're rest of world. if you're from India and China, the reality is whatever category you look for immigration in the United States, you always have to worry about backlogs, whether it's EB1, whether it's EB1A, EB1C, EB2, EB3. Every category is going to have some kind of restriction because there's just a lot of people who are applying alongside you. And the reality is, if that's your priority, you have to understand what you're getting yourself into, not just from a financial perspective, but the whole reason you're doing, I think we can all agree that the whole reason anyone does an EB5 application is less about the finance and more about the immigration, right? The whole reason you're doing this is for your immigration purpose. You have to understand what that wait time could be like. And like Mike said, it could be totally okay to have an EAD for 7, 8 years. That's okay. There's nothing wrong with that. You're going to have that status. There's a lot of people who are in EB2 who have had an adjustment filed for several years and are just working on their EADs. It's not uncommon or unheard of, but you have to know what you're getting into, and that's all we're here to do is provide that information.
Perfect.
Yep.
And then this last slide is something that I don't think no one in the industry has really been focusing on this, but I think it's helpful to lay out the history and where we are today. So when you look back at 2013, 14, 15, 16, these were the China days when it was 80, 90% China, over 10,000 applications a year for 4 straight years, nearly all from China. And back then, we didn't have the data that we have today. Nobody knew exactly how many there were and what the backlog was going to be. Now, we got a sense of it, but nothing like the information that we have today. So it caught a ton of people by surprise when all of a sudden they invested and there was a surprise 7-year, 8-year, 10-year backlog of people ahead of them. We still have Chinese investors waiting for green cards today that invested in 2015, 2016. So that is something where at least now we can see what the reality is. That's one takeaway from this slide. The second is that what I'd want to focus on is from fiscal year 2024, demand's already increased significantly from the start of the RIA. You can see 22 to 23 to 24 in the growth. There is no better time than now. If somehow demand goes back and China continues what they were before, all these set-aside visas, rural and urban, are going to get taken up very quickly for China. So there's a lot of room to grow based on what we saw before. And we could probably spend an hour just talking about this, of how in the next couple of years, depending on demand, a lot of the unreserved could clear out the old China backlog and bring them back current, things like that. But in reality, we are still bouncing off the lows of the number of investors in the program. And with only 10,000 visas a year, that implies under 5,000 applicants a year can actually do it and everything stays current. So we're still below where I think it's sustainable, but based on the last few quarters and what we're seeing, I think over the next year or two, if it continues to grow where it is, we are going to hit that ramp again where every category for Chinese investors and possibly even Indian investors could be backlogged. So there's no better time than now to do it, where the visa bulletin shows current, you can see the math. There's not much of a chance of a real backlog today. So that's the main takeaway that I would bring up, is just always important to look at the past and in the big picture.
Yeah, and to that point, I'll just add in, when you are looking at backlogs, whether you're Chinese, Indian, or, we've seen other countries be backlogged before. We've seen Vietnam hit those numbers in the past, and we've seen Brazil get pretty close in years past. So it's not like it's only China and India that need to worry about a backlog. When you're worried about any backlog, the only real number that matters at that point is your priority date. And I think it's a tough lesson when people realize that too late is, if you had just filed earlier, you would be saving yourself months or even years sometimes in getting your green card faster. And it's definitely the case in EB5 as well. So your priority date matters. There's a lot of creative solutions that are kind of running around in the market right now that are helping investors and making EB5 more accessible than it ever has been. That includes, using some of your retirement savings towards EB5. That includes partial funding options that a lot of regional centers are providing. There's a lot of ways to get comfortable with EB5, and to Mike's point, now is probably the best time as ever to go ahead and lock in that priority date and make sure that you're protected, whatever may come in the future, especially as demand continues to rise.
Ahmed, just to echo that point, spend just 30 seconds talking about the importance of hiring an experienced EB5 attorney who's not going to, let your file languish. And, once you make a decision to do EB5, days, weeks delay in getting that application in, could be, potentially disastrous in terms of creating a much longer waiting period, because the attorney couldn't get things together and get it in.
Right. Yeah, I think one of the things that people kind of focus on with attorneys is price and basically, some level of track record and things like that. And don't get me wrong, both of those things are very important. A lot of people are putting together their entire life savings to be able to do an EB5 application to begin with. And so every dollar on top of that can be very, troublesome for them as a family. I understand that, track record definitely matters. You should always be choosing an attorney that has a really, distinguished record of getting approvals and has a lot of past clients who can attest to that. But one of the things that often gets ignored is response time and just ability to get the work done. And, being an attorney myself and having worked at Fragment, that, basically you're dealing with volume. You're handling hundreds of cases a month sometimes, and you have to get things out or people's lives, get affected. It's definitely the case here as well. EB5, like I said, priority date is so important, especially when you start talking about backlogs. A good immigration attorney could save you months or years even by getting your case out the door much faster and responding to your questions, reviewing your documentation faster versus an attorney who might be taking a little bit more time to get everything done. A few weeks here and there may not be an issue, but if you're talking about a month of difference, it certainly makes a big difference, especially as we get closer and closer to a backlog even appearing, a retrogression appearing on the visa bulletin. A good example of this would be like today, you can file your case and concurrently file your adjustment of status. There will come a time where you won't be able to do that, and having an attorney who's ready to go and get your case out the door quickly is your best fail-safe to avoid a situation where the visa backlog, the visa category backlogs, and you can no longer concurrently file by the time your case is ready to go.
Yep, I always tell investors to, before they finalize which attorney they want to use, just make sure to get as part of the contract that they're going to sign to hire the attorney, like a written commitment in terms of timing of how long it's going to take once they get hired to turn the file around, right? Even if it's not a specific date or deadline, but at least a range. That way you've got some, commitment of, okay, this person's going to make my application a priority, and I'm not going to be waiting months and months and months for this to actually get submitted. All right, this is just the same conclusion slide. We included it twice just for reference. So that's the end of our formal remarks. Thank you for staying with us through the end. We will be publishing a blog article on this topic with a recorded webinar, with this recorded webinar video inside of it. It will be live on the website next week, and we'll also have a downloadable version of all of these slides. So if you are interested in rewatching part of this webinar or in downloading any of these slides, just give us a few days next week. We will have something up and an email will go out. You can just bookmark our website there in the chat, EB5investments.com, and we'll have all this data there as well. And special thank you again to IIUSA, WR Immigration, Meyer Law Group, and Dan at Customers Bank for taking time and allocating resources away from other activities of the bank to get this information over to us and help simplify it. This is something, Dan, that the bank could help continue in the future, right? So we can try to publish this information, more regularly going forward.
Oh yeah, definitely.
Okay. Any final thoughts that we want to share?
No, appreciate everybody spending the time. I know it ran a little bit long. I'd love to hit that conclusion slide again, but you can just rewind it 15 minutes in and hear everything when we publish it. But yeah, we have tons of data and an exciting time in EB5. It's growing and more data than we've ever had before to come to real conclusions of what the best path is for certain individuals. So thanks again for listening, and we're excited to keep providing this type of transparent data to the market.
Yep, and if you do have questions about anything that we covered today and you want, kind of specific questions about your case, use the QR code or go to our website, schedule a call, and one of us will be happy to answer questions about any of these topics and also, help share information about any of our current projects as well.